Everybody, welcome to Trading Capital's exclusive analysis. In today's we're discussing yields and commodities and the real reason why interest rates are falling. Is it due to recession? Is it due to impending global economic decline? Why are interest rates falling? Are central banks cutting? We have seen many central banks cut, but really the ever important Federal Reserve has yet to cut interest rate policy. Now, the question is, have interest rates been falling recently due to Federal Reserve anticipated cuts, or is it simply because commodities have been decimated? Well, let's look at this 10-year yield. Obviously, this 10-year yield now has triggered a pretty bearish breakdown here. Pivot low to pivot low to pivot low. This is what's known as a daily head and shoulders pattern. And simply speaking, though, it's not as easy as just triggering a bearish pattern, getting short or getting long. You have to understand how these patterns form. They take time to play out. They don't just happen in a straight line. One thing's for certain, you got a death cross that occurred. The 50 moving average here in purple and the daily 200 moving average in blue intersected in a downtrend. So that is telling us that over the long term and medium term, bonds are likely to catch a bid and interest rates are likely going to continue to fall. Now the question is, has this trigger of this bearish pattern happened because the bond market is expecting a recession or a global economic decline or a massive disinflationary event? Or is it simply a massive breakdown in interest rates because maybe oil has weakened quite substantially? A precipitous fall from 84 down to a low of 72. That's a 12-point move, now getting a nice solid bounce. Maybe it's also because Dr. Copper, their largest base metal in the world, is also seeing a precipitous fall. And believe it or not, I'm going to give you a little bit of a nugget here. Copper stocks are looking very, very intriguing on the long side. I mean, this has gone through a tremendous measured move fall to the downside, and maybe it has a tiny touch more, but I think the risk to reward in copper stocks is looking pretty substantial. And then you go into some other commodities. You look at uranium. Uranium, that has gone through a precipitous fall in recent times. And then we can also look at the DBC ETF. But look at uranium. I mean, a massive capitulation for also triggering that head and shoulders. That has completed its downside measured move. You look at this DBC commodity basket, which is just an ETF that tracks a whole host of different commodities. And that too itself has also seen a precipitous fall. So we all know commodities move based off of supply and demand. So maybe commodities have fallen because demand has certainly started to shrink, which maybe is a possible sign of recession or a disinflationary event or global weakening. Or maybe it's just a telltale sign that there's a new potential Republican Party coming on board, which is generally a little bit more pro commodity based, certainly in the energy market. There's a lot of different variations and reasons as to why interest rates or bonds rally, why commodities fall, why stocks go up and down. We just kind of have to put forth our best effort, our best fundamental analysis, our best technical analysis, and position ourselves in the ability to make money in this market. And that's certainly what we're trying to do here at Trading Capital. And again, there's going to be a lot of different narratives that get spun out there, whether or not we're going to go through a deflationary event, whether or not we've bottomed and we're going to go through a boom cycle, whether or not we're going through a huge recession. A lot of worst case bear scenarios will say even a depression. But just take it one day at a time. There's no sense in trying to run with some extreme narrative because at the end of the day, you really don't know what the extreme narrative may be until we've actually hit that narrative itself. But one thing's for certain, commodities have certainly seen a precipitous fall, which in theory, that puts a lot of downward pressure on interest rates. So there's a lot of trading opportunities that I'm certainly excited for. Our members have taken a whole host of new trades in recent sessions, and there's going to be a lot of opportunities coming forth in the next couple weeks as we certainly progress through the second half of this year. Take care, everybody. We'll see you in the charts a little bit later.